what do we trade? How do we trade? Well, you know, first of all, it's all about risk management. First, I would think before you decide which signal to take or what new position, always keep a journal, always have a checklist before you enter the trade. And that checklist, you know, if you're bullish, I propose to have 30% of your portfolio in cash. If you think we're trading in the bull market, 30% in cash. If you think we're trading in the bear market, I propose 50% of your portfolio in cash. What do you do with the rest of the cash? Very common question right now. One of the bubbles, you know, if you follow the, you know, social media, one of the bubbles is money market fund. It's just out of control, right? Everybody's putting money in money market fund. It's at all-time high, exponentially growing, right? Because everybody, you know, you don't need to take a risk and just make 5%. I mean, there could be dislocation in money market funds, but it, you know, I mean, if banks are bailing out, if government is bailing out banks, they will bail out money market fund. Well, it's a government, right? Money market funds are guaranteed by government. So I'm not worried about money market fund, but you could have dislocation where it might not trade at parity, right? There have been historical occurrences of that. But nonetheless, I still keep majority of my money in bond market or money market fund. So you keep half of your portfolio in money market fund, and you just double check with your broker dealer, make sure you do get, I don't know, 4.5, 4.7% on your money market. Second one is, again, portfolio drawdown. Portfolio drawdown, what does it mean to me? 4 positions and not risking more than 2.5%. Every time I put on a trade, I go through my checklist and I go through all my positions, say, okay, do I have 4 positions? If I have 3, okay, I can put on another position. You know, is my position down more than 2.5%? If it is, then I exit out this position. So that rule is important because you want to make sure you are not down more than 10% of your portfolio. That is right now, you know, the common theme is if you don't think about risk, if the risk management is second, right? If your returns are #1 priority and your risk management is #2 priority, this is not the market where you think like that, right? Maybe in the bull market you can think like that, but in the bear market you cannot. You have to think about risk before you look at the returns, right? So I encourage everybody to keep a journal, and before you enter the trade, just look at number of position size. I mean, it's easier said than done. You know, usually we learn on our own mistakes, not on other people. But I know if in my case, you know, every time I had these, you know, trade on emotions, right, where my blood pressure goes up, there's only 2 reasons, right? It's either I have too many positions or position size is inappropriate and the trade is going against me. And we know trades do go against you, right? You could be on the wrong side. You could be a bull and we're trading in the bear market, or you can be a bear and we're trading in the bull market. You know, I'm gonna know this for the next couple of months.